Today I'm going to share with you my 3 levers on how to increase your e-learning profit margin by 20% or more in your business. Some of you may know that I started my professional career as a certified public accountant working for PricewaterhouseCoopers as an IT auditor for large enterprises. And one thing that I really got excited about when I was in accounting was how businesses spend their money and how you can increase your profit margins. And I believe that e-learning can be one of the most powerful things that you integrate into your organization to not only increase your revenue by increasing passive income at your organization, but can also decrease expenses by upskilling your employees, by making your employees more efficient and effective at your organization. But when we look at an e-learning program in general, a lot of people think, I really wish we could have an e-learning program, or I really wish that our e-learning program was more efficient and effective, but it just costs a lot of money. Well, my first lever to increasing your e-learning profit margin by 20% or more may increase it by that just by turning this one lever, and that is upgrade your tech stack. What I've seen over my decade of experience in e-learning is that organizations making $50 million a year are typically spending 5 to 200x what they should be on e-learning technology. And here's why. E-learning is a relatively new concept in the world. Let's look back at when the first computer was made. The first computer that was made commercially available to purchase was in the 1950s. And how much did it cost? It cost $1 million. That is over $12 million in today's currency. Well, last time I checked, my phone did not cost me $12 million. It didn't even cost me $1 million. It may have cost me $1,000, but I'm pretty sure that the contract I signed with my phone provider gave it to me either at a discount or free because of the 2 to 3 year contract that I signed. And this phone does exponentially more than that first computer. And it costs a fraction of the price. Same thing with e-learning. When we're looking at e-learning software, I see that organizations, when they first purchased the e-learning software that is running their e-learning programs or learning experience programs at their companies, helping you sell your online course at your company, you probably purchased something that was top of the line when you got it 10 years ago, 15 years ago, even 5 years ago. But now it has fallen behind, is outdated, and most importantly, it is way too expensive. Because just like our cell phones are way better, exponentially better than that first computer, the new e-learning technologies that have stayed up with the tech, that are the cutting edge, are significantly less expensive. So you may be spending $50K all the way to $1 million or even more per year just on the software at your organization. And you can apply this, by the way, outside of e-learning. If your company's making $50 million a year, you probably have a lot of different software and technology in your tech stack. And you probably have a lot of legacy systems that can be upgraded. And the upgrade could actually be a benefit, a win-win to you. Higher value, lower cost. It's the same thing I tell people about Costco gas. If you go get gas at Costco, I personally put premium gas in all my cars. And the premium gas at Costco is less expensive than the mid-grade gas at a gas station. And guess what? The gas at Costco is higher value. It is actually better for your car. So first of all, we're putting a higher level gas in our car, premium instead of mid-grade, and the gas overall at Costco is better on your car. There are win-wins in the world, and this is one of them, where if you're spending $50K to $1 million a year, you should actually be spending 5 to 10K a year, or actually less. I'm just estimating the worst case scenario. Well, Johnny, how does that even work? Well, I invite you to check out 2 platforms, Kajabi and Talent LMS. I have links to both platforms below this video and in the show notes if you're listening to this as a podcast. And not only are you going to get access to both of these systems, and by the way, Kajabi is best for selling online courses. It can be used for internal training as well. It has lower functionality on that side of things than Talent LMS, but Talent LMS is for training your employees. I don't recommend using Talent LMS to sell your online courses. I do recommend having Kajabi sell your online courses. And you can try out both of these systems absolutely free by clicking on the link in the description below and in the podcast show notes. I'm also going to give you access to a full course of how to get Kajabi up and running for you and your team. Same thing, you go down the Talent LMS route. I'm going to give you a full course teaching you and your team how to get Talent LMS up and running for your team. And when you start paying for either one of these platforms, which you don't even have to pay it yearly, you can break this down into monthly payments. So once you start paying your monthly payments, your low monthly payment of less than $500 a month for Kajabi and less than $1,000 a month for Talent LMS, I'm going to give you what I call my platform to profit strategy session, where I sit down with you and your team, and I help you put a plan together of how to get the most ROI out of your chosen platform and in your e-learning program. We focus on the highest ROI initiatives in your program together, and I help you map that out in this strategy session. And maybe you want a more personalized look at what the right platform is for you. And that's why I've created my e-learning platform finder, which is going to match you and your team with the best fit e-learning platform in a matter of seconds. And you're going to get all the things that I just listed in addition to getting matched with the system. You're going to get that free trial, that free course, and once you start paying for the platform, that free strategy session, platform to profit session with me. So this on its own may have bumped that profit margin up by 20%. My clients who invest in my Enterprise Learning Accelerator program find that even after paying us, they end up saving 6 figures or more on their e-learning. So in addition to increasing revenue, they're saving 6 figures or more even after paying us. And this is one of the levers that we pull with them to increase their profit margins and to get that 6-figure savings even after paying us. I highly recommend that you pull this lever too. Lever number 2, to increase your profit margin for your e-learning by 20% or more. Let's do an 80-20 analysis. Prioritize your profit producers. Reason why we want to do this is because what I have found in my own programs and in the programs of my Enterprise Learning Accelerator partnership clients, where I'm literally the e-learning partner, me and my team at eLearning Partners are the e-learning partner for these organizations. S&P 500 company, CoStar, worldwide company. They get the majority of their online course, their e-learning profit, their e-learning income from 2 programs. 2 programs, that's the 20%. That's the 20% that drives 80% or more of results. And that's what this is. An 80-20 analysis is the same as the Pareto principle, meaning that 80% of results come from 20% of efforts, and vice versa. 20% of results come from 80% of efforts. So what I highly recommend you and your organization do is figure out what is the 20%, and then you can start eliminating the 80%. A lot of this can be costs. You can do an 80-20 analysis of the costs related to your e-learning program. You can do an 80-20 analysis related to the expenses and the costs in your entire organization. And double down, triple down, quadruple down on the 20%. What you should really be able to do is get rid of the 80% and then take all of those efforts on the 80% and put them into the 20%. That could be money that you're spending on the 80%. That could be time you're spending on the 80%. And you can actually take this one step further even. What is 20% of 20%? 4%. What is 80% of 80%? 64%. What does this mean? This means that 64% of results come from 4% of efforts. So within the 20%, there's another 20% that you can really be focusing at your organization. With CoStar, there's one program that makes up 64%, give or take a couple percentages, of profits related to their e-learning business. And what have we done together? We have tripled down, quadrupled down, put most of our efforts in the 4%. We have put some additional efforts into that other 16% that makes up the 20% informing the 80%. But really, we have put the majority of our efforts into the 4%. And this is what I want you to do too. Then eliminate. You can eliminate a lot of cost here. When you're looking at your financial statements, you can really look at, why are we spending so much money on that? What is that driving in our business? Well, why aren't we spending more money on this, more time? Why do we have staff focused over here on this part of our business, this part of our e-learning program that only makes 5-10% of our total revenue for the program, when this part over here is making 64 to 80% of the revenue? If we're looking at internal programs, why are we focused on building all of these new programs if we really just have 1 or 2 programs that create exponential results in upskilling our employees, that make our employees more efficient and effective? Let's focus on those courses and just get more people to take them. Ask our employees what else we could add to those courses. Why build 15 other courses when we have 1 or 2 that are driving the most results in our organization? Lever 2, 80-20 analysis, or better yet, 64-4 analysis. And I do all of this not only with my clients, but with my own business as well. I looked at this office space that we have had for the past 10 years. And at one point, it was a good investment. But now, I only found myself going into the office once a week because I serve all of my clients online now all over the world. I don't actually have the need for an office space to serve my clients. Well, that equated to $18,000 a year. At 1 day a week, that's $18,000 divided by 52. This equates to approximately $350 per day in the office that I was spending. Because my team is all over the country and world as well. I was the only person going into the office, and this is what I was spending per day in the office, $350. So what did I do? I got rid of the office and immediately increased my profit margin by $18,000 a year. What is your company spending money on that it doesn't need to? But maybe at some point you did, and you just haven't let go and eliminated that piece. That's lever number 2. Let's move to lever number 3. Lever number 3, this is much more of a mindset lever than anything else. 10x thinking over 2x. This is a mindset shift that you and your organization need to do. And it's because you are leaving exponential amounts of revenue on the table and you are spending exponentially more because of this. Now, hopefully you and your organization, your team members are at the very least thinking 2x. What I want you to do is think 10x. And what does this mean? This means that in order to grow your company, grow your business, it's really easy to think 2x. Well, if we're selling $500,000 of this course, all we have to do is double our ad spend and we'll sell $1 million of this course. That's 2x thinking. If we want to sell 10 times, won't we just 10x it? I guess. But what if the question comes down to, we need to hire double the amount of people to sell this course. Do you really want to have to hire 10 times the people? Amazing author Dr. Benjamin Hardy and Dan Sullivan wrote the book 10x is easier than 2x. There's a lot of books out there on this topic. This is, in my opinion, the best one from a theoretical perspective. The best overall is The Science of Scaling by Dr. Benjamin Hardy. He co-wrote both of these books. And the key here is to change your thinking in your organization from 2x to 10x. 10x thinking is actually creates solutions that are easier than 2x thinking. It allows you to filter out the noise. So we go back to lever 2. When you're looking at the 80% versus the 20%. 2x thinking would be, okay, let's just do more of everything in our business and we'll double our revenue. 10x thinking is, let's only do the 4% so we can exponentially grow our business. Let's cut out all the things that we don't actually need. How can we 10x our revenue with our current team? By 10xing your revenue with your current team, you are increasing your profit margin. Let's pretend that you have, we'll call it 10 people in your e-learning department. Maybe you have 15, but let's go with 10. Maybe you have 20, but let's keep the numbers simple. Let's go with 10. Let's say that you are paying each of these 10 people $100K a year. Now I know that it probably fluctuates a little bit lower, a little bit more, a lot lower, a lot more, but let's go with $100K. What does this mean? This means that you're spending $1 million a year. On top of that $1 million you're spending on your e-learning software. I'm just kidding. You're spending $1 million a year. And let's say that right now, this is creating $2 million of revenue. It's pretty good if this was your only cost. If you're already spending $1 million on tech, then you're break even. Wow, if you're spending $1 million on tech and you just watched this video and now you're able to cut it to 5,000, you have not only increased your profit margin for your e-learning business by 20%, you've actually increased it by 50%. That is a huge win for you. I wish that for you. I hope that for you. But let's look at this. If we decide that we want to use 2x thinking and we want to increase our revenue, then in theoretically, we could double our staff to 20 people at $100K a year. And then we'd be spending $2 million a year. And then we just got to hope that this is going to increase our revenue to $4 million a year. Well, this is still a 50% PM just based on labor. And this is also 50% PM, profit margin. Nothing changed. Yeah, our revenue increased, that's great, but our profit margin didn't. What if we kept our initial team and we instead thought to ourselves, how can we, with the same team, increase our revenue from $2 million a year to $20 million revenue a year with the same team? Our profit margin has now gone from 50% to 95%. Now, yet again, this is just revenue versus labor. We're not including the tech, we're not including overhead, all these other expenses, which depending on the 80-20 analysis, you should be eliminating a lot of that anyway. But we've gone with the same staff, and to be fair, you're gonna wanna give your staff a raise, and I recommend 15%, could give them more. So this would be actually 10 times 115K a year, which equals 1.15 mil a year. But we tasked them to figure out how to get to 20 mil revenue a year. And we do that by using e-learning to upskill our employees, partnering with AI to make our employees more efficient and effective. And guess what? We didn't have to spend all this extra money recruiting people. This is just if we all of a sudden got 10 more highly skilled workers, we may get to $4 million a year revenue. But the reality is it costs on average to get one new employee at $100K a year, $150,000 just to get them up and running. Because the first year they're probably not going to be productive. Versus giving a 15% raise is going to cost you with taxes and everything at your organization somewhere around 20K per person. So really, we'll call this 1.2 mil a year. But our goal is to make them more efficient, to bring in that 20 mil revenue. We do that with 10x thinking. I highly recommend you check out both books, 10x is easier than 2x, and The Science of Scaling. Now, I built these 3 levers so you can do this all on your own. Upgrade your technology to save 5 to 200x. Do your 80-20 analysis, or better yet, do a 64-4 analysis so that you can cut down on unnecessary costs. Eliminate those costs to increase your profit margin. And lever 3, change your team's mindset from 2x thinking to 10x thinking so that you as a team can achieve exponentially more for your organization. Do all these 3 levers on your own. And you will increase your profit margin by 20% or more. Now, some organizations decide that they want a partner to go on this journey with them. They're making $50 million a year, they have 200 to 500 employees, and they have some sort of e-learning or training department. And they really want a partner to go on this journey with them. And maybe they have a legacy system. Maybe you have a legacy technology that you want to make sure that you have a fluid transition to one of these higher value, lower cost technologies that's going to save you up to $1 million a year just on switching out technologies. Or maybe you have a program that's stalled and just hasn't even gotten off the ground yet because of all these other higher ROI priorities in your business. Well, that's where you and your company may be the right fit for my Enterprise Learning Accelerator partnership program, where we become your e-learning partner. At eLearning Partners, we become our client's e-learning partner to not only increase your profit margin, but save you and your organization 6 figures or more per year, even after paying our fee. If this sounds interesting to you, I invite you to learn more in the description below on YouTube or in the show notes if you're listening to this as a podcast. And I'll see you in the next episode.